Hi traders, it's Andrew and I want to show you an example of a bearish bat pattern that's set up. So looking at the higher time frames, this is the US dollar Swiss franc daily chart that we're currently looking at, and you can see we've had a nice leg down. So if we take our Fibonacci tool and we run it from the very high to the very low, we want to identify a potential key area of resistance. You can see the swing down, we've retraced 38, 50, we're currently bouncing. Now if you take your horizontal line and we just drag it from the top, work your way down, you're looking for that confluence, okay? So 79, you can see the highs across here. We've got the 70.7, also not a bad area. You can see in terms of the levels of horizontal support resistance with the retracement. And then further down you see this level right here, 62%, and you can see here we have support, resistance, 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 and a few hits across here. So that's sort of a good area. And remember, we're looking for patterns at these levels. We're not necessarily just looking to get in as price hits the level. So let's just follow price along here. This is a nice piece of software we're using, a Forex tester. If you've got some testing software, always good to go and put it to the test and play around with different strategies or trading models that you're looking at. So I've just gone straight to a 30-minute chart. This is where the pattern's head up. You can see if we compress here, we had a nice rejection off that key level. So remember, that's that horizontal support resistance from the daily with the Fibonacci retracement, that 62 level. Here again, there's nothing to be done until price actually proves itself to you, okay? That the levels like it to hold, and here again, we just, we wait for price and see what it does. You're going to be looking for a pattern. So if we just follow price along here, I'll zoom this up. We had a nice rejection, a nice selling pressure, you can see of us coming into the market. So if we run our Fibonacci tool from the high down to this low, you see price dropped. It's not the clearest swing here, okay, but nevertheless nice drop. And remember, looking at a pattern coming off that key area, so we're not looking to catch a specific level. Remember, these are higher time frame zones. Prices then rallied, and we just follow along here. So now we've had price rally. You can see it's just come past the 50%, not as far as the 62, and then it's retraced. So if we take our Fibonacci tool, another tool, we draw from the low up to this high, you can see prices retraced down, find support around this 38, 50 level, and now it's starting to bounce. But have a look further up. You see the confluence, we have the 886 and the 1618 level, okay? That would be the completion area of the bat pattern. So we just move this line up, you see that area right there. So that's the area that I'll be looking to place a trade at. Remember, we're looking to use, or I'm looking to use, a limit order. So that's the level right there, around 92.13. So if we now move over to our platform and we want to put an order in here, new pending order, I want to set a sell limit at the level of 0.9213. Okay, that's the number. And what I like to do is just put it a few pips below the level, because sometimes the orders come in just below for a sell or just above for a buy. So normally 2 pips is about what I'm looking for, and then a stop above the highs here, okay? So if we look at around 92, just have a look here, 10, let's go with 15 to be safe, okay? So just going to put it above the high. And in terms of targets, okay, targets, we've got a few options here. So in terms of targets, you can look at the very next area of potential resistance, okay, which is sort of in here or here, or you can start looking a little bit lower, or you can look at the lows. Now I really like to shoot for the lows or even extensions, but it really depends on the actual environment, okay? are you in a big trend, are you in a range, what's the rest of the market doing. So for this example, we'll just put an order in here, and we can look at what happens from there in terms of price action. Okay, the price is moving up, and you can see this is why you need to put a limit order in. Okay, especially with these bat patterns, they have a tendency, especially this last leg, to be quite aggressive in terms of price rallying up into that area. Okay, so you can see the working order has just been filled at 92.11. Okay, stop loss is at 92.21. I actually put a 10 pip stop in there, didn't change it. So here again, stop just above the highs. Okay, with these patterns, if they fail, by breaking the highs, then you don't really want to be in it. So 10 to 15 pips, just put a 10 pips in, it's fine. Remember, you're not trying to be right here, you're looking at probabilities of price reversing in terms of coming off that higher time frame key level. So we just have a look at that daily chart. It's real messy at the moment here in terms of all the fibs on here, but that's essentially the area there. We've had rejections, we've had some selling pressure come off the level, and then we've had that pattern set up. You just have a look at the hourly chart. You can see it also sets up on the hourly, not that clearly in terms of just this little one candle coming down on a retracement, but here again you can see this pattern sets up over a few days. Okay, so it's real nice in terms of if you don't have enough time to sit in front of the screens all day long, you've got time to analyze the charts and use limit orders. So we'll just follow price along. This is your first area. If we just have a look at this level here, okay, that's your first sort of major area here and here in terms of problematic levels. Okay, resistance here, support. Okay, currently 10 pips up. It's coming down. See, it's broken below this level here. Now you can start moving the risk out of the trade if you want to, but just be cautious in terms of moving it too aggressively. Okay, because sometimes price will come back and retrace on you a little bit here. Okay, if you're very aggressive, you can get the stop to break even. We're currently sort of 1-to-1 at the moment on the trade. What I can do is move the stop just above this swing high. This high is 92.16. So we reduce some risk on the trade. Okay, I'll just follow price along here now. It's just coming down to this next area here. We want to see price actually close below this level. Okay, and here again, there's different ways of managing these trades. If you're very aggressive and you want to manage this more on a sort of an intraday level, then as shown in the trade management area, use these areas. Here price closes below this area of support, now becoming resistance. Once it does that, if you're very aggressive on the trade, you could look to reduce your risk to above this high. Okay, if you actively manage in this. If you're not wanting to manage it that aggressively, okay, then you can literally put your limits in, entry, stop loss above the highs to start the trade, and reduce the risk, and then you can look to target the lows. Okay, another area here to watch very closely in terms of taking profits, okay, or taking something off, and then the lows. So I'm going to look at targeting those lows just to keep it simple. But you can see our price battling at this area. You see the spike up, okay, doesn't close below the area. So what we can do now, you see our price comes back, spikes through the area, doesn't close. See the candle closes. This is how I use candles. See the rejection, doesn't close above the level, and then we spike down. Here's that next area. You see that area holding, resistance, support. Okay, another area to take potential profits. If you're wanting to actively manage this, you can look to scale at these different levels. What I'm going to do now is I'm going to move the stop loss to break even. So 92.11 was the entry, and the target, what I want to do is I want to look at going for this target here, and the area I'm interested in is, you see this 79 level here, see this little order block here, this blue candle. I want to look around that area right there. It's around 90. Just have a look here. Just try and put. Okay, so 92.67, and I'm going to add the spread, which is like 3 pips, so 91.70. Okay, so if it comes down and spikes that level, I want to be out of that. So modify that and just follow along. As I said, if you want to take profits around these areas, they're good places to take something off if you want to scale out. See how this level holds once again, support becoming resistance. So you see how we have a spike above the level. Okay, this is common practice once price drops off these levels, and this is why I don't like to be too aggressive in terms of actively managing the trade because of the retracement. Okay, so price comes back here, you have support, resistance, comes back above. You want to see it close below the level, so there it's closing back below the level now. Okay, and it's starting to break down here. So what you can do here, if you want, you could also start to lock some profits into the trade. We haven't taken anything off on this particular trade example. We're targeting the lows. Everyone's going to do it slightly differently out, and I will go over some different examples. So price has now hit the target, and you can see it actually continues lower. Alright, so nice little trade setup there. That was a bearish bat. Found our key higher time resistance from the daily chart. We had the 62% Fibonacci retracement from the biggest swing here, with a nice level of horizontal support resistance. And then we had 30-minute was the clearest, a bearish bat pattern that set up at the 8861618 extension. Started above the highs, 10-15 pips. Okay, if it breaks the highs, you don't really want to be in the trade. And you can see it came down, hit area of support, then bounced, and we had a run towards the lows. Let me just show the account history. You can see the trade paid 41 pips.